Hi, all. This is Z for eMeetingWizard.com and MarketWizards.com with a quick update on the weekend of just before the end of the year. New Year's Eve coming up in a couple of days, and just thought I'd do a quick review for a few of our traders and those who are interested. A reminder, please use risk capital that you can afford to lose if you're playing this game, and review our disclaimers in terms of service if you're using our products and services. We will have some upcoming products and services this year. And for those of you who have interest, check out our shop page and see if there's anything there that will help you to up your game. And we do have a couple of things that are on sale right now, and periodically we will put them on sale here and there. And these are for serious traders. These are not for people who like to just play around on Twitter and poke fun of each other. These are for people who'd like to take their game from a hobby level up to the next level, what I would consider to be professional, and would be trying to take some money out of the market regularly, either as a add on to what you do as a business, or obviously to become full-time at this game. All right, let's take a look at a couple of charts from the recent past. This is our telling through time. We can see how really oversold we got right around the Christmas holiday. And then since then we have bounced. There are any number of reasons for that bounce. I'm not going to speculate why. We have our ideas based on sequence trading, and we'll look at a couple of other charts to put that into perspective. We had picked certain numbers that we thought might be good locations to make sure you are paid by, and we hit any number of those. And as the market kept dropping and dropping, then we noticed an area that might be the next area of support. So we'll take a look at those charts to put it into perspective. This is a 2-year chart, and I would have to say that this has probably been the most helpful for us to suspect where we were starting to get into a deeply oversold territory. And you'll note this area down here, this 23.75 was an area that we had called as, okay, that's our next potential target, and be very careful about looking below that. It did break below it, but obviously on a big scale, these are marginal lows. So when we had started the bounce from here, we said, okay, that's going to be our support, 23.75 until broken. And then we assumed that we had this rotation to resolve to the 24.1275. Go back and look at the post I made. They'll reference this chart. And at one point we said that's our next objective, to get above that and hold. And then obviously once we get back up above that area, and we're looking at the next box, which is that 25.0175, 25.02, and that was referenced for Friday, for yesterday. So when we pulled back underneath, we had talked to our traders about making sure that if we got back below this 2400, to use that 97, 98 as a key idea for support. And if it held, then we would be bouncing, and that held beautifully. So this is the chart that has really helped us to understand the power of this move and where we might potentially get a bounce. I still think that this is suspect, that we could take this low out. For now, we're bouncing, but I think in a bear flag type move, we could still come back and undermine that. And, you know, if you really want to think about where Donald Trump's bounce came from, if the boys are looking to discredit him at all, then that's got to go. So I'm going to pay attention to this. That's obviously support until broken, but we will see rotations coming, and if we start to come down here, that is going to be a very big idea for a support target. Here's a 1-year chart. And step by step, we can see the levels. I believe in using levels. I also like moving averages, but I do like something that will help to put market structure in perspective. So a big boy is going to be looking at a chart like this. And when we talked about that 95 to 98 area support the other day, this was one of the charts I was looking at because it just was clear that this needed to be an area to hold, to keep driving long side. And we had that 24.75. That was also in play, and a pretty big idea on Friday. Can we undermine that or not? And then obviously the next look up here, basis this chart, is going to be at the 53s, 25.53. We had a breakdown at 25.30 area, and so that's been our present context. That would be a retest. So that's also part of the game that we're looking at. Got within about 7 points of that on Friday. And here's a look at last week's range, and we note how typically we will get the first couple of boxes need to be resolved before you can even think about coming back more. And same thing on the short side. The first couple of boxes, 2 to 3 boxes, need to be resolved before you can really see which direction the rotation is going. So once we set the low, then we're looking obviously for the next level, and then we're looking for the third level. And then if we can get through the middle, then obviously these type trades are the ones that come back into no man's land. And then you're going to be watching areas like this low just below it to see whether or not you're holding a double bottom or not. And if we get a big push, as we did the other day, came out of nowhere, the end of the day, quote, nowhere, but we're looking at that 97 at the time, and that was a pretty big idea for us. We'd said 95 to 00, but 97.25 was a specific measure we looked at. And then overnight, we get the scoot up to the new high. We come back, we get a great pullback, and then we get the bounce into the close. And this sell-off right at the end, we had said yesterday that if we got the pullback early, look to buy. And if we got the push early, then look for a sell. So probably out of this rotation, the only thing that came back farther than I would have thought would be the late day sell. And I wasn't here. I was visiting with relatives, so I wasn't even trading. Was in the morning for an hour, and then left that advice. If we got the pullback, make sure you paid 68.75 as our support, and but that 72 area was pretty clear, and so we get the push. But anybody that had a good week from stem to stern is going to want to cover and take some profits, in my opinion. And so that's why we get a late day fade. Nothing more than traders looking to book some profits and take them home over the weekend, and then perhaps not even be trading on Monday because of holiday coming up. So that's the way we look at this. Here's a monthly chart, and same philosophy. Anybody that had themselves a good month certainly said, okay, I'm out of here, taking the profits, and probably not even trading the last couple of days, just enjoying time with family and visiting and whatever. So I look at this as a reactionary bounce to a great month and a great couple of months for the short side. I had to break down at the 26.30, and once we broke, first of all, a reminder that we talked about several things that were important, and a lot of traders don't focus on that, but we do. And one was last year's high, 26.98.25. We lost that, and then the 26.75.25, which was the year open, we lost that also. So here we are with a great sell program that came a lot further than a lot of traders thought. And now we've got a V bounce, but I think we're kind of running out of some steam here. We need a pullback, and then this will be the hard part once we come back into the middle of this swing. So one more day, we'll see what they do with it, and then off to the races next week. All right, here's a look at the Globex chart for Friday, and shows a complete range of the day, the overnight range as well as the RTH. We can see like a double top up here. Once you lose the high, then you want to keep that last high as your resistance still broken. And we get a nice little sell off at the end of the day that comes back probably a lot farther than most traders would have expected. But again, I'm attributing that to the weeklies taking some profits at the end of the day. Note how this dried up pretty quickly in the morning. And you will note that they took out both the overnight low and the overnight high. This is like a Z pattern. Normally, I'd expect that to come back into the middle. And this one obviously kept plunging right through it. But typically, once we wash out one side, I like to see a Z pattern where they'll wash the other side out and then come back in and kind of goes no place. But it breaks the stops of both sides, and it's a kind of holding pattern. And this is a 2-day chart. Had the idea of maybe we should reference 2 days and not just the whole week. We had a very powerful move, so let's see what that looks like. And at the time when we looked at this, I'm going to take a quick peek here to show that instead of full range. I've got this. Let's do, well, leave that full range, but let's come down and let's take, instead of high lows, the fixed price levels, 19.25, and then the low was 23.97. Easy to forget those hundreds. Oh my goodness, we've gone so far. No, I haven't been drinking. Not yet. Still too early. Let's put a 5 there and see what happens. There you go. So what I'm referencing is this first high. So let's take our arrow line. So from this low to this high, and one of our typical patterns is a 40 back. We call it a 456 trade. You don't know whether you're going 4, 5, or 6. This one happens to come back to the top of the profile, right here, the top of our box. And it's called our pipe. And then we get to rebound. So you can see from this reference point, this was absolutely a perfect pullback and then the bounce. And then obviously if I switch that again and just change that now as we make the new high, and I can just go ahead and reference that. That lows on the chart. It'll now show that. So you can see this was a pretty accurate portrayal of a very aggressive buy. A lot of traders were thinking plunge maybe because you got all this range that was a program trade. You can see that this was a boy saying we're going up. But we need a little time before we come back and penetrate, and we should come back and obviously penetrate this and retest this zone back in here. So for now, what we had looked at was 68.75. We called as our support from that other chart we had shown. And anybody wanted to buy, we thought 68s to 72s was the right buy zone, and see if you can get a kick back in towards testing that 98 to 02. And then when this rotations aborts, then you get this push end of the day. And then all of these traders who think they have a winner going up, just give it right back unless they're smart enough to take profits. And really, that's what we try to do. How can we find 4 to 5 points every day out of the size of these swings? It sounds like it's easy, but it's not, because if you have one going against you 8 or 10 points, that's not a lot of fun either. And then you've got to make that all back up. So it's a game of finding the highest odds trades and going with the flow when it is moving. And I see traders talk about order flow all the time, but in my opinion, if you're a great trader, you're going to size up your methodology, whether it's using charts or using order flow or whatever, but you're going to have a sixth sense about what they're trying to do, especially after you see patterns for a number of times. And I usually look for 3-point breakouts. And to be honest with you, in this market, you're going to leave a lot of chips on the table because they just run farther than you'd think they'd run. And that's why you have to take your stop outs. And this was that predictive model. Here's that 6875 we were talking about. This is a predictive model that we use. Obviously, support back here in the green box area, and we get through the middle. You got to get that 37.5. That's our middle in this profile that had been generated by our work. And then step by step, you're looking for these potential targets one by one. And obviously, for now, this still is a very important support. If that level breaks, and we had said, someone had, a friend of mine on Twitter had said, what are you thinking? And I said, for now, 60. We're going to use 60 as our support because that's what my work showed, 60. So this is the aggressive zone up here, and then better buy zones. And once it comes back, you don't know once they come back whether it's going to hold and push back, but certainly better buy territories down here than up here. We're in the red zone. And for now, that means that from basis the last couple of weeks range, the better buys are down here. And this was that 06 area that we talked about, and then that 21, 22 area, and so on. So I just read a chart like this and say, okay, where can we go, and what's it look like? So for now, that's our basic range. Call it 70. We called it 70 to be to be simple about it. Said, look, 70 is our support, and look at the 20 zone to be resistance. That was the way we had framed it. So keep it simple. You can go crazy if you try to make too much out of any one pattern. And the more you step back, the more you can see the type of ranges that you can almost see the areas that need retesting, and you can see the areas of support. You can see this high that needs to hold. If we can get above this bar up in here and then come up. Obviously, I'm thinking the 50 area, that the middle of this bar has got to be first resistance, not the high. So those are things we'll be looking at in the coming weeks. You can also look down here and say, all right, well, for now, that's an inverted head and shoulders, So this is going to be a very important low, that 97 low that we just talked about. So that's a quick look at some of the things I'm looking at. And again, trade light. If you're going to play on Monday, I'm traveling. I'm going back to Florida. Been up in Connecticut visiting family. We're heading back tomorrow, and won't look at charts again probably until later on Monday. But or maybe in my cell phone on the way. So if you're trading, play well. Never make it about any one day or any one trade. And if you need an education, a lot of good traders out there who I think provide excellent information. For those of you who poo-poo traders who share with others, I think you're missing the boat. We help ourselves when we help others. We learn our own business better. And there are a lot of traders who do this at a fair value. They don't look to gouge people, and they offer serious work to help traders. So good luck, and see you next year.